What a day it was in the markets here. We had some interesting developments overnight when it comes to public policy involving the U.S. and its relationship with China. That put a big sell-off underworks here, primarily in the tech space, primarily in the chip space, with the Philadelphia Semiconductor Index down 7% on the day. That was the worst one-day gain for the stocks going back to the onset of the pandemic back, Scarlett, in March of 2020. But we should point out 30 members in that Philadelphia Semiconductor Index, and for some reason, 2 of them did not sell off at all.
Yeah, that's right. Intel is notably one of them, and Global Foundries, the ticker there is GFS, also defined the overall decline in chip stocks. So both of these names seen as potentially benefiting if the White House does move forward with more import restrictions on advanced semiconductor technology. Specifically, GFS is based in upstate New York, and you have Intel, which is based in Silicon Valley. Both of those companies received awards as part of the CHIPS Act because of their domestic manufacturing operations. So investors extrapolating the White House's considerations and thinking that these two could benefit. Meantime, you have Five Below losing a quarter of its value today. That is now the lowest since May of 2020 for the company. The discount retailer cut its second quarter earnings per share guidance and announced that its CEO, Joel Anderson, would step down. At least 7 analysts downgraded the stock in the wake of that announcement. But our top story this hour is really a deep dive into what a Trump 2.0 administration would mean for investors. According to the former president and current Republican nominee, Trumponomics is shorthand for low interest rates and taxes. We know this. That is not new. But this time around, he plans to implement them a lot faster. So later this hour, we're going to discuss the costs, political and economic, inherent perhaps in that approach.